Regardless of where you stand politically, we all can agree that we are living in uncertain times now. Economic instability, fluctuating markets, and global events are making people anxious about their financial future. While we can't predict the future, we can definitely do something that can control our financial situation. So in this video, I'll share the 8 common sense financial tips that will help you navigate these uncertain times. So number 1 is hold your investments. Don't panic sell. Imagine you own a rental property and the value of that property drops, let's say 20% for some reason. Would you sell right away at a loss? My assumption is probably not. Because usually with time, the property market, the value of the property will go up. It will recover. And the same principle applies to the stock investments. If the stock market drops, don't panic and sell at the bottom. Historically, the market has always recovered over the long run. For example, during the 2008 financial crisis, the S&P 500 crashed nearly 40%, but those who held their investments and didn't sell in fear saw their portfolios recover and grow tremendously in the following years. Similarly, in 2025, we've already seen an 8% drop in the S&P 500 in the last month. So instead of reacting emotionally, just zoom out and think about the long term and stay the course. You'll be fine. Alright, number 2 is don't try to be the next recession millionaire. We've all seen the headlines, market is crashing, stocks on sale. But while it's true, when the market is down, it's a really good buying opportunity. But trying to time the market is very risky. There's a saying in the investment world that time in the market is better than timing the market. Because we all know that timing the market can be risky. During the 2000 dot-com bubble burst, many investors jumped into the tech stocks because they thought it looked really cheap. But many companies never recovered and investors lost a lot of money. So the term millionaire are made in a recession doesn't apply to the masses. Yes, there are exceptions, but exceptions can't be taken as examples, right? So instead of chasing the short-term gains, focus on steady, diversified portfolio like index fund or mutual funds, which does have a track record of long-term growth. Number 3 is protect your emergency fund. Think of your emergency fund as a financial life jacket. You hope you don't need it, but when you do, it's a lifesaver. Imagine losing your job tomorrow in these challenging times. How many months can you survive without your paycheck? A good rule of thumb is to have at least 3 to 6 months worth of expenses saved. This cash reserve prevents you from selling investments at a loss or going into debt when unexpected expenses arises. So number 4 is hold off on big purchases. Let's say you've been thinking about the next iPhone or upgrading your car. But with economic uncertainty, ask yourself, do I need this right now? During uncertain times like this, prioritize your needs over your wants and hold off on the big purchases. And you can buy them once things stabilizes. But until then, hold off to it. Next, number 5 is track your spending. Do you know exactly how much you've spent on dining out or shopping or subscriptions last month? If not, I think this is the right time to start doing that. Because once you start tracking your spending, you'll know a lot about your spending behaviors. And that's where you can cut down on the things that you don't need immediately. A simple Google Sheet or a spreadsheet can do the job. If you don't know how to track your spending, you can use a simple Google Sheet or a spreadsheet or even use my tracker that I have made. Link in the description. It's a very comprehensive yet very easy to use. Once you start tracking your expenses, you'll know a lot about your spending habits. And during this time, you really need to have those habits in check. Number 6 is don't watch too much news. If you spend hours watching financial news, soon you might feel that the world is coming to an end. Just watch the news just to be aware what's happening in the world, not every hour of the day. It's not gonna help anyway. The media thrives on fear-based headlines like stock markets crashing, recession ahead. But here's the truth, no one can predict the future. So rather than focusing on the negativity, work on something that you can take control of. Take control of your budgeting, spending, tracking, expenses, emergency fund, all those basics, because the rest you can't control. Number 7 is keep a long-term perspective. Think of investing like planting a tree. If you constantly dig it up to check the roots, it's not gonna grow. But if you leave it alone and water it regularly, it will flourish. So the same thing goes for your money. The market goes through these ups and downs through the cycle, but the history shows that over decades, it always trends upward. You have to understand that patience always pays off. So keep a long long-term perspective. Not a short-term, but long-term. And don't let the short-term fear derail your long-term financial success. And the last one, realize that no one can predict the future. Even the best economist or the financial analyst gets it wrong. In 2008, some experts predicted the economy would take decades to recover. Yet by 2013, the stock market had hit new records high. So instead of worrying about things beyond your control, focus on the things that you can control. Like save consistently, invest for the long term, and live below your means. Success in personal finance is not about predicting the future. It's making the smart decision, the smart choices today that will set you up for tomorrow. So there you have it. I hope these 8 financial tips can actually help you thrive in this challenging times. Let me know in the comment section which one of these 8 will work the best for you. Thanks for watching. I'll see you in the next one.